All right, guys, welcome back to the channel. And in today's video, I want to share something that I found out this morning that is going to help my investing and it might help your investing as well, which is why I'm sharing it. So I was emailing with some friends of mine and I was explaining how, although I'm not enthralled with Interactive Brokers back end, their interface. The thing I love about Interactive Brokers is their stock yield enhancement program. And from my understanding, it was the only one out there that's at least advertised or talked about or promoted. And so I started doing a little research and I saw that TD Ameritrade set this up, I believe, fairly recently. And, as you guys know, I have 600 plus thousand in TD Ameritrade, 400,000 or so in Interactive Brokers. And presently I make about $70 to $90 a month in free money in share lending with Interactive Brokers. And so I'll be able to add that to my TD Ameritrade account. So right here, I just pulled this up for you guys. Frequently asked questions, fully paid lending income program. TD Ameritrade's fully paid lending income program provides clients the opportunity to earn extra income from the securities they already own by loaning shares to TD Ameritrade while clients maintain ownership of the shares. TD Ameritrade typically loans the shares to third parties, broker, traders, hedge funds for a fee, which is then shared with clients in a 50-50 split. That's the exact same setup as Interactive Brokers 50-50 split. And basically, they're loaning these shares generally, from my understanding, to short sellers. So if someone wants to short the stock, they have to pay a fee to do so. So then the broker is splitting that fee. And for those of you who follow my channel, you know that I love passive portfolio income, which is why I love real estate. Not only the tax benefits that you get from real estate, but it's also that passive style of income. Though I would say, to be frank, that real estate, at least the real estate I do, is far from passive. It's far from mailbox money. I mean, it's just generally considered passive, and that I don't go to a place and earn earned income for it. So it's called passive. Portfolio would be dividends, option premium. But you can see that I really gravitate to these things. I mean, that's why I love option premium, because I collect that fee and then I can use that fee to push my snowball further and further down the hill. I love dividends. It accelerates compounding. Take the dividends, reinvest the dividend. And I love the share lending because you really don't do anything other than click the box and allow it. Now, my account is an LLC account, so I had to fill out a whole form and that I had to download and send it into TD, so it's pending. So I'll obviously update you guys when that goes live and then how much I'm earning from that. And like I said, I'm going to pull up Interactive Brokers here. So I have my account here, and you can see this number 7301. I did this month to date for for September, the last month. And then accrual reversal means when you have the cash in there, it sits there and then it gets converted into cash or transferred into cash. So 7301, not bad. I mean, it's not going to initially change your life, right? It's $70 a month. But if TD Ameritrade, which has a little more capital in it, maybe it ends up being, 100 there. So maybe at some point I get $200 a month in free money, basically. And, so that's $2,400 in a year. I mean, that's a cruise if you want to go on a cruise just by clicking a button. It's funny. Speaking of which, how clicking one button or not clicking a button can alter your life. I spoke to a woman a long while ago about her investments, and she had a bunch of shares in a pharmaceutical company, and she didn't know about dividend reinvestment. So a lot of times she would just get the dividends and it would be swept into her checking account. And we kind of did the math, and it ended up being that she cost herself, like over 20 years, $500,000 to $600,000 by not reinvesting her dividends. So, just by me at 41 finding this out, getting this set up, And the way that compound interest works, and the way that I run my whole, I'll use the word here, empire, if you want to use that. It's not quite an empire yet, but I'm getting there. But the way I run my whole show here is, that if I get $2,400 a year for the next 20 years, that it's not going to go into cash. It's going to go into investment. So even if I just put it in vanilla index funds, you can do the math. You can read any sort of personal finance book, look at those compound interest calculators, $200 a month at 10%, we could pull it up, but you're looking at maybe $500,000, $300,000, somewhere in there over 20 years, just from checking this box and having this program go live. So I'll go over now to, this is TD Ameritrade's, Interactive Brokers explanation. This is their stock yield enhancement program, which is pretty much the same at what TD Ameritrade calls theirs fully paid lending income program, stock yield enhancement, and earn extra income on the fully paid shares of stock held in your account by allowing IBKR to borrow shares from you in exchange for collateral, either U.S. Treasuries or cash, and then lend the shares to traders who want to sell them short and are willing to pay interest to borrow them. Each day that your stock is on loan, you'll be paid interest on the collateral value for the loan based on market rates. IBKR pays you 50% of the income it earns from lending the shares. So there you go. So that just kind of breaks down. Now, the only downside, or one of the downsides on this, and I've read this elsewhere, is if your stock is on loan, I believe that you're paid the dividend in ordinary income as opposed to a qualified dividend. So a friend of mine mentioned he knew someone who it negated the benefit because of the tax burden. I mean, the one thing I would say is I own my brokerage account in LLC, which holds real estate. So I get the offset. So it should be okay. But that's something to kind of keep in mind, is if you have a lot of dividend paying stocks and the stock happens to be on loan at the moment that it's paying the dividend, then there could be something of a tax issue. Just kind of keep that in mind. That's sort of out of my realm. You're going to have to speak to, a CPA or your tax person to really get into the weeds there on that. But and so just wanted to pull up, as you guys know, I did that video on Grant Cardone with the cash out refi. And this is something that plays into the idea, to me, of the share lending program. So this is Robert Kiyosaki, famous from Rich Dad Poor Dad. This is ESBI chart. And the E is an employee. You exchange your time and effort for an income. You don't work, you do not get paid. So that's your W-2 earned income person. Self-employed is the next level up. You work for yourself, but can you take a 6-week holiday and your business keeps on going without you? So you're self-employed. The next rung up on the ladder is big business. These people have people working hard for them to generate an income. They might have 20 employees. So it's not just a sole proprietor. You're running an actual business there. And then the last one is the I quadrant. I aspire to be in the I quadrant. I think I am in the I quadrant at this point. They're the people that have money working hard for them. Play golf and live a good life. I don't play golf, although I do garden and go to the gym, but that's my golf, I guess. But that, the expression people always say, don't work for money, have your money work for you, or make your money work hard for you. And that's that idea of, again, option premium, dividend income, rental income, and now you have share lending income. So the more you can just stockpile these I quadrant types of income, the better off you'll be, and you're never dependent on a single source of income, a single job, a single W-2 income. So definitely plays in that. And and the last thing I wanted to discuss, and I saw it this morning, as you guys know who follow my channel, I thought a couple years ago, and actually this is before I started doing a lot of filming for my channel. I was writing about it on Seeking Alpha. And I thought at the time that Gazprom, this was in 2017, 2018, might have been the best value play on the planet at the time. It was trading for, I don't know, like 3 times earnings. It's one of the largest companies in the world. I mean, we can look at what Microsoft trades at, price to earnings, Tesla, Google, um, all just, even just the American stock market. The American stock market, S&P 500, I believe, is 34 times earnings right now. The median is 15 to 18. This was trading at 2, 3, 4 times earnings at the time. So as you can see, I took a big position for me. Everything's relative, right? I was buying, you can see here, starting November 17, up into December 17, into 18. And then I got a nice dividend, my first dividend from them. But you can see my total cost basis is 13,893. It's about 524 a share. It's trading today at 1070, which is trading at my value is $28,355.46. So an increase in $14,462, which is a 104.10% return. So definitely that was a winner. It's done very, very well for me. And actually, the return is higher when you look at total return. I'm not going to do the math, but again, for those of you who watch my channel, I'm a big believer in total return because I do a lot with dividends. So you'd back out like this right here. I'd black out this as a cost basis, the 140.49. I'd back out this 791 as a cost basis, and I'd back out this 794 and 684 because those were dividends that were reinvested. So to me, that's, as I always say, free manna from heaven, not a cost basis. So we're doing total return. So that would probably be, I mean, I'm just making this up here, maybe 150. I mean, I could do the math later, but whatever, whether it's 104 or 120 or 150 or 170, I mean, it's a huge return. And again, that's the spirit of value investing. The spirit of value investing is you're looking for things that are intrinsically worth $1 and they're trading for 50 cents. So that's what I saw Gazprom as. Now, the hard part is not necessarily identifying the value stocks like this. The hard part is the exit. So do I now take my profit and sell and have $28,000 in cash, no longer own Gazprom, deal with the tax burden on that? Do I continue to just hold? Warren Buffett, my favorite holding period is forever. Or if my cost basis is, let's say, 10,000, do I sell? Because when I back out those dividends there, do I sell $10,000 worth, and then it's sort of an infinite return? I have my money out, and these are questions that all investors wrestle with, from the highest level to beginners. Is the exit in real estate too, right? I went through that whole cash out refi. Should I have sold the property and done a 1031? Should I have, done a cash out refi? What's the best exit? And I generally gravitate to be more of a buy and hold guy. I mean, if I were going to do anything other than that, I would probably do that second option of selling 10 to 13,000 worth, and that way it's an infinite return. My real estate deal is an infinite return at this point, and then my Gazprom holding would be an infinite return. And when you're an investor, you're looking for infinite returns, right? That's kind of the name of the game. So that's pretty much it for today. This just kind of came up last minute. I was going to do a video on something else today, and then I got this information just because I was mentioned to someone, I think that Interactive Broker is the only one. And then I see that TD is doing this now as well. I did the application, so I'll let you guys know if and when it gets approved. I mean, I hope it would get approved. And then what kind of money I'm earning from it based on my holdings. So, all right, guys, thanks so much. Really appreciate all the likes, shares, subscribes. Well over 1,400 subscribers now. Starting to earn a little money from the YouTube revenue. It's starting to trickle in. Nothing of consequence, but it's just like the share lending, $70 a month. It's not going to change your life, but you start putting together different streams like that. And it goes back to a book that I read. I can't recall the name right now, but it was recommended from the YouTube channel Alux, and it's the line in the book that resonated is, poor people carry buckets or want to carry multiple buckets. Rich people build pipelines. So the more pipelines you can build, the better off you'll be. So with that, take care. Ciao.